final session. I'm sure you're all waiting for your lunch. I suppose this is an interesting discussion for a sector that probably finance and the lingo of finance is not that common, maybe in large part. The topic today is around finance as a driver of innovation, but I think when we look to this panel, which is made up of a member of a Green Building Council, advisors to investment in actually finding finance for the building sector and innovation in the sector, a social lender and a banking representative, that we'll get a mix of what perspective there is in terms of where sustainable finance is at now. So I suppose maybe for the first question, I'm going to ask each of you to maybe look at where do you think finance is as an enabler of the change that's required currently? Just right at this point in time. So maybe from your own perspective, and I might lead with Vera, but maybe give a sense of what you do yourself and where you see it as what role finance plays currently.
Yeah. Thank you so much for having me. I'm honestly and truly excited to share my thought with you, because on this panel I think I'm some kind of an alien as an architect and an engineer, and I really thought that what we heard today, that collaboration in the construction and building sector, for example, between architect and engineer is hard, but now I'm a professor in sustainable real estate development, so I added another level of complexity to my work. And accompanying this, I was asked to follow a master thesis which led to a financial product, and just to advise a little bit from an engineering and architect perspective how we could shape those loans which are actively linked to performance, what we've heard before from Judith, what I really, really loved. This is what I did for the last 1.5 years together with the Austrian Green Building Council. So I think that we all know that this transformation towards sustainable and resource-friendly environment, of course, it needs knowledge, strength, and motivation, but first and foremost, we need to finance that. So I think the financial sector is, besides of technology, of course, that driver for making this happen.
Thank you. Maybe we'll go to you then, Alex.
Hello everybody. Very happy to be here. I'm not sure if I can add anything more than I think Vera kind of covered everything that I also wanted to say. I mean, clearly coming from a financial background and also sustainability background, the transition is not going to happen if nobody is willing to invest in it. So finance is essential. Yeah, it's as nice as it is to have the best sustainable products, the best technologies. If nobody is willing to pay for it, then it's not going to happen. This is one. Two, we cannot have individuals pay for it. Yeah, so we need to try to attract capital market products, have capital market products for financiers to be able to invest, because your individual Alexandra might not be willing to really make a mess of her house and pay for it afterwards, just because the targets are now as ambitious as they are, or might not have the financial capacity. So this is why financiers are extremely important here, because somebody needs to, pay the bill, invest in this, and I think that, this is one of the most important things from my point of view.
Maybe just for background, to give a sense of what you do in EnerSave.
Yes, so at EnerSave, we are enabling finance to actually go both ways. So from the project developers towards creating capital market products, so bundling, standardizing the contracts, bundling them, securitize them, and placing them with bigger investors, because the problem on the market is that each ticket size or each project is very small. So investing in one project that is 50,000 euro is not going to get any bank extremely ecstatic about it, and neither financial funds. Financial funds have a life of 5 to 7 years. They need to deploy very quickly capital, 300 million minimum, to have a proper fund. So that means that going there with the little tiny project of a heat pump is not, you know, neither ambitious enough in terms of reaching their own targets and neither attractive enough in terms of finance. So what we are doing is we are creating these products for the market to be able to help people like Hans that is going to talk shortly about what he's doing, and you're actually collaborating in is how to give scale and make sure that he can continue doing and financing the projects that need to be financed, and at the same time creating products for the big financiers. So it's kind of, yeah, the circularity of finance in this case.
Thank you. Hans, an actual opening for you. So you're a social mortgage lender in Belgium. So give a sense of where you think the financing market as an enabler of the changes at this point in time.
Well, as is already said, without finance, nothing will move. But on the other hand, finance is not the only issue that is at hand. What we're doing as a social lender, we're working, let's say, for the lower middle class families that own a house, buy a house, first-time buyers often. And what we're trying to do is to blend this financing model and make sure that these, which is typically a public that has a big problems to reach the financial markets. We try to blend the financial offer with home renovation services. That's what we do. And we think there is real value in that for this part of the public. And certainly next to the regular banks, let's say, that's what we do as a social lender. We focus on that public. We try to reach, with the help of Alexandra organization, the financial market, but blend it so in a way that we can de-risk the operations of renovations, because we're really working on the renovation market.
So the ultimate blended financing position.
That's what we're trying to organize at scale. We have some projects where we did that, but we really need to scale this thing up, because if we see there are more than 200 residential dwellings, 200 million residential dwellings in Europe, let's say 30 to 40% of them are in really bad shape. If we want to have impact on the decarbonization of the residential housing stock, that is where the work needs to be done, and that's really what we're trying to do.
Thank you. And Louise, just to give a banking perspective, you're not a banker, but you represent a lot of bankers, and you're head of sustainability. So give a sense of where you think it is currently for the banking market. Well, it's going to be an Irish context, but you have European experience. So just to get a sense of where it is now.
Thank you, Jillian. I'll just step back for a second, just in terms of where the banks are at. I think, you know, in financial services anyway, the banks have been quite quick off the blocks on sustainability generally, and that's because of regulation mostly. So, say, for example, the European Central Bank, they have guidance on the banks, which confuses me. It's not actually guidance, it is strict requirement with the threat of penalties. And what that has meant is over the last few years, the banks have put in place, they've had to put climate risk into their risk management framework, so their business model and their strategy. So we're all aware of that in Ireland. We've all seen the ads, you know, from a few institutions. But really what it means is that banks have integrated and have been very busy and are very busy integrating climate risk and sustainable finance into their business model and into their strategy. And when it comes to the built environment, in some ways, like events like today, I wouldn't say I'm not saying it is less challenging in the built environment, but because of, for new buildings, the fact that in Ireland everything must be A-rated already, the whole European Commission's mantra of it'll no longer be sustainable finance, it'll just be finance. It's sort of happening already in the built environment. You know, if you're lending a green mortgage to somebody who's buying a new house, like it's just green, you know, because the house is green. But obviously a huge amount needs to be done in the products and services and scaling that up, and things like crowding in capital and blended finance and all the things that scaling up that we're talking about here is what really needs to happen in Ireland. So, I'm not going to list different products and services, but as you know, what the banks have been doing is looking at, because mortgages are such a huge part of just under the domestic banks, what they've been doing is very much trying to reward customers who are able to go green. So somebody who can afford to retrofit, somebody who's lucky enough to buy an A-rated house, not an E-rated house as in my case, but you know, an A-rated house. So they are rewarding the green behaviour of customers and also of businesses. So you can get a sustainability linked loan where over a period of years, you know, they'll say, well, when you come back and show us how your energy costs have decreased, you know, we will then decrease the rate, your interest rate, your pricing. So there's a lot of innovation and products that are in that space. But in terms of the actual built environment, there was obviously just a huge amount to do. And like the housing crisis in Ireland is not going to be solved without private capital. I think it's 80% of the units that are to be built by 2030, 44,000 units. I'm not an expert at this, you guys are, but you know, that has to be funded by private capital. So it's to find the opportunity to move in some ways from the climate risk, which is still really important, to look at the opportunity of sustainable finance.
Thanks, Louise. And I suppose that we're probably all in violent agreement then on the current state and that the need for finance and sustainable finance to scale both the innovation and the ambition that exist, not just in obviously in the built environment sector, but across the sectors. To a point there where you're talking about in terms of regulation driving behaviour, and obviously CSRD has been hanging over loads of people's heads in terms of reporting. And to relate back to Julie's presentation on EU taxonomy and how that will impact, just is it the game changer? Do we see it as the game changer of behaviour and change? I think honestly, in what will it do that will make a difference?
Yeah,
any of you that want to take that one up, but
I'll keep going, will it?
Yeah, you can keep going.
I would think very quickly, the taxonomy, yeah, ultimately, like a lot of the regs, and we're all tearing our hair out over them at the moment, but the taxonomy ultimately is a good thing, but it is only a classification system. Like, it is very, very helpful, but it just classifies sustainable activities. And from the sector's perspective, when you're lending, like, it's great if you can lend to somebody who can demonstrate they're sustainable, they're totally green. Like, that's happy days for everybody in terms of risk and opportunity. But we sort of need and I'm not looking for more regulation, but it's sort of a taxonomy for transition finance. So, you know, how do you, like, the taxonomy will help banks know where they're green. Oh, sorry, thank you. Taxonomy will help people know where they're green, but it doesn't really help. You know, so the banks have to green their portfolios. You know, you hear them talking about this. They have net zero targets because of the regulation, because of their own ambition. But they have to, in order to do that, they have to know what's green and what's not green. And taxonomy will help with that. But what's actually needed more is the transition, the kind of things that are going to green. And I know the Sustainable Finance Platform that was referenced in the World Green Building Council's presentation there, like, they are fantastic. Group of experts advising the Commission, and they're reviewing all the sustainable finance framework, and they're looking at transition finance. So I think that would be very helpful.
Alex or Hans, whichever.
Yeah, I'll second that. I mean, I think the taxonomy is a great tool, a great idea, but I don't see it's really changing the real world for now. I mean, we're producing green assets. But the green assets are indeed the new built homes that need to be green anyway because of national regulation. So what does it bring about in the decarbonization of the real world? I'm not sure of that. On the other hand, when we talk about the retrofitting business, the taxonomy is not really helping at this stage. I mean, a typical retrofitting project of a small family house is a small project. There is an owner involved who has a mind of its own. And if you have to check all the boxes of the taxonomy on that, and certainly the do no significant harm boxes and all the other things, because the 30% energy efficiency gain that's not a difficult one, but all the other check boxes, they're almost impossible to do when you talk about the renovation of a single family home. So in that respect, I don't think that the taxonomy is really helping in the area where there is really work to be done and where the biggest impact can be found. So I hope there will be some adaptations to it. But the idea is great. I mean, I think it's really necessary to have a common wording about common framework for these green assets.
Yeah, I suppose just to follow on that, then in that it drives good behaviour, does it also identify gaps it doesn't address? And I'm considering where there's a lot of derelict buildings, and so is it low-hanging fruit to follow what the taxonomy will, in terms of the following the money, I suppose is my question. Maybe, Alex, you want to talk to that?
Yeah, I think so. I think the EU taxonomy, it is a good piece of work because first of all, it does clarify a little bit what is green and what is not. And you have lots of stakeholders that have been accused of greenwashing, and it's very important to have clarity. Indeed, it needs refinement, and I think this is why the position paper of the World GBC is very important, because it kind of flashes out where it's still not clear enough, where more work is needed, and where collaboration is needed. And I think that this is one of the main takeovers from what I'm taking home from today, is that there needs to be a bit more of dialogue between the stakeholders, also at the green council level, green building council level, in the way that we interpret. Each country is very different. Yeah, Europe is not one country. We are made of 27 countries with all different problems, with all different market realities, with different reactions to the same product. Yeah. If before greenwashing was a problem, today greenwashing is a problem. For example, we have in Luxembourg lots of funds that they don't want to claim that they're anything. They're not ESG compliant, they're not sustainability funds, they're Article 6 funds, which means nothing to report. Even if they do good and let's say they invest in sustainability assets, they don't want to claim it because it's becoming a bit too much in terms of reporting. So I think it's a good tool because it kind of feeds into all the regulation that is out there, all the directives, the corporate sustainability, the sustainable financial sustainability directive. But I do understand that on a practical level, it might just complicate things. And if we don't have enough tools on the market, then we just need to, build a capacity to be able to overcome these barriers and be able to give answers very quickly and move the market forward. Not sure if I answered your question, though.
No, you answered my question. I suppose there is a question for me that the focus on a lot of the regulation tends to be towards the new build, to that A-rated end product. And in terms of when we look at the wider housing sector and the issues in terms of just providing housing, there's a lot across Europe, it's not just an Irish context, but there's a lot of dereliction, there's a lot of empty spaces, vacant homes in towns and villages. And there's no real incentive, I suppose, in the taxonomy or otherwise, to enter that kind of quite gnarly question in terms of how you turn those properties around. And from an investor's perspective, it's difficult because it's not as clear.
Yeah, it's not as clear, and sometimes even if, for example, you have it would become a stranded asset. Yeah, so you have also the reaction in the market that a lot of real estate funds are just starting to sell their portfolio because it's going to become a stranded asset. So if they don't want to invest in it, they're just going to dump it to the market, and then whoever picks it up, they will need to invest to be able to take it to a more proper sustainability index in terms of how the building is being perceived, and also maybe repurpose it. So I think it depends a lot if it makes sense on their business model to make such an investment or actually just not do it. What we're seeing is that in general they do start to just dispose of the assets. Yeah.
Well, maybe just to the point of then we move to innovation and finance as a driver of innovation. Maybe Anna Vera, just context of how you see that working, maybe in the Austrian market. Yeah.
First of all, I would like to add something to this discussion. I'm absolutely with you. I can feel it with when I'm talking with my colleagues at the development sector and the financial sector that EU taxonomy is sometimes really, really hard and it's not fun, but I'm a fangirl of that because it was the first time that I could experience that we seriously linked the technical requirements with economic activity. This was the first time I experienced in Austria when the people outside of the technical and architectural sphere approached to me and asked me, what does this mean? What is a green building? And then we started a discussion because I tried to make them understand that the taxonomy, it is a yes-no game. And it doesn't define a green building, but it defines the activities, which road we should go. So I think this is the game changer in this case, and this inspired to some people to develop this green loan. I just teased it a little bit on, and I would love to share this story with you because I'm so proud of that, and it was very interesting. Maybe it's the Austrian mentality, but when you're applying something new, where you really don't know if it's 100 feasible or will it be successful, then everybody is talking about why this won't work and you won't apply it somewhere else. But there was a young master student who says, okay, I'm into this sector already. He was working at this financial institute. He says, I'm in the very beginning of my career. I have nothing to lose. The supervisor said, yeah, of course. It is your master thesis. Just make something applied out of this. And the CEO of the Austrian Green Building Council, he's a very experienced, grown-up man. I don't want to say an old white man, but he is. This was an advantage because if you want to change the system, you really have to know it very, very well from the very beginning on. And so those three guys in this case just started to shape this product, which is three-stage. The first stage is how, if you want to buy and flip or refurbish a brown asset. It is nowadays hard to get some finance because it's brown. So in the first stage, yes, we will finance purchasing this, but you need a little bit more equity in advance because the financial risks are higher. In the second stage, a tailored, individual to this tailored part of refurbishment will be designed together with experts. This was the moment they were approaching me because I was their guinea pig, the proxy for this integral planning approach. And in the third stage, they, by contract, they fixed that they will refinance this equity share when the effects occurs, not when the activity had been set. And we all absolutely underestimated the amount of discussions and negotiations we needed, mainly in the second stage, because this was a check in the box. When you're accountable for the effect and not for the activity, you really need a feasible process, which is quite similar to an integral planning process. And this really was, we thought that we could shape this product within 6 months. We needed 1 year. And now, hopefully, we will be successful. And we know that this is not the perfect scheme, but we just thought we have to try. And of course, there are different stages. The EU taxonomy alignment is, of course, about the activity. the pre-certification, for example, for the process. It is, you can use it, the process of the Austrian Green Building Council. And of course, but you need to consider the architect and the planners in the same process in parallel too. So hopefully I just could give you a glimpse of an idea for this. It sounds very easily, this three-stage process, but it took us many, many months and hours of negotiations, and now hopefully the market will use this product. And for my last sentence in this case, one of my endowers, he is the representative of the biggest residential housing provider in Austria. And of course, he knows he would love to buy all those brown assets, but he told us he needs a financial product like this because of this investment, but he needs to have something feasible where he can tell his own financial director that this amount of equity, it will be refinanced in the third stage, because they have enough equity, but they have their own constraints inside of their company. We have to embrace complexity, because we cannot, it doesn't disappear magically. We really have to embrace it.
I don't doubt it. I just think you have to bring people with you. And sometimes the stakeholder partners aren't, and to an earlier point of one of the panels where there was a discussion around collaboration, and I think the word they used was combative rather than collaborative. Finance can be similar in terms of the competitive nature of it, so it can be difficult, but I think this shows a good example of cross-sectoral collaboration, where there are more than one vested interest to get a good result. I suppose that we've seen an awful lot of earlier examples of the way innovation is coming into the sector. So we're seeing it from research through to modelling and demonstration models on what can be delivered. I suppose for me, innovation financing slightly different than innovation in finance, if you know what I mean. That it's the appetite and the ambition of the finance providers to take on those new technologies for scale. And I'm just wondering, across your jurisdictions, if you're seeing it in terms of acceptance, or whether this is a slow burn. And I have my own feeling on it, but maybe just to get a sense of the different jurisdictions on it. Anyone wants to come in on that?
I can go first, and then I'll. I think it depends a lot on the technology and what we're talking about, and also on the activity that they want to tackle. I think high tech and artificial intelligence and all these things, they are very interesting for funds that fund that type of activity. If we're talking about the banking sector or private equity funds in energy efficiency or in green energy, then they're going to look at their own technology. And here again, there was a big leap. Solar panels are a very good example. Everybody's buying into them. Projects, at least in Italy, Spain, as far as we know, and France, they're moving very quickly also because the legislation is put in place. So it's not only the fact that the funds or the financiers would invest in the project, it comes also from a shift in the market in terms of behavior. Nobody's going to invest in solar panels if nobody wants them on their rooftops. So I think it depends, and let's not forget that sometimes financiers, they work in silos. They like a certain product because they feel comfortable, because the risk, it's predictable, because they understand it. In terms of innovation in finance, I think that all the products that are developed under the sun right now in terms of finance, they're out there already. It's just thinking a bit outside of the box. Maybe de-risking a bit the investment, maybe blending it differently, maybe having different instruments, from crowdfunding platforms to energy communities coming together. It's just the way that you try to mix them up together and bring it to the market, and hopefully there's also an appetite. just one more thing that I would like to add here. It's also in Europe we are not so open. Yeah, I'm sure that I'm looking around the table, around the room, and I'm sure that a lot of you guys just have money that are sitting in the bank account that is not invested in anything. I know I do. Yeah, I'm not investing in shares. I'm not on the crowdfunding platforms. I'm just sitting there, not even getting my interest that I could get from my bank. This is probably the vast majority of the European individual. We don't have this appetite like in the States to just go for it, invest in something, take a chance, 500 euro there, 1,000 euro there, and then we'll see what's happening. Actually, the central bank director was saying that Europe is sitting on 3 trillion, was it? 3 trillion of assets in banks that are not doing anything from savings. Yeah, which means that also we need to change our behavior as individuals. We need to get out there. We need to start, if there's a product on crowdfunding platform that is super interesting, is it a technology? Is it project finance for energy efficiency? Is it green mortgages for social lending? It's good to get in there and, you know, just try it and see. Clearly, having a tax break on that investment would be very good. I know that the UK is having, I know that you have this funding scheme, SEI, and different types of, yeah. And I know that sometimes is very, it proved to be helpful sometimes even for companies that I work in the UK, because people invested. But in mainland Europe, we don't have, at least in Luxembourg, there's not such a product, yeah? So we are not having any incentive. People are just sitting on the money, and that needs to change. We need to kind of put those 3 trillion to work, yeah?
Maybe just Louise to that, in the sense that I think the comment here would be that finance people don't manage their own money very well, but aside from that, I probably agree. But there is a whole piece around risk appetite here, both at a personal level and at the finance provider's level. So when it comes to innovation, and you don't have to speak to the Irish particularly, but as a banking model, has the risk appetite shifted, recognising the dynamic nature of what's changing, not just in this industry, but in other industries, as we face kind of delivery of transformative change in terms of climate?
Yeah, I don't know if I'm answering your question, but the risk appetite in terms of sustainable finance or, you know, supporting green initiatives in the built environment, like there's loads of projects out there and the banks really want to finance them, but we can't divorce it, unfortunately, from the housing supply issue. So everybody wants to live in a better rated home, and it's so interesting what you're saying there about savings, but we do these surveys all the time about consumers and the BER rating, the better energy, the EPC in Ireland, you know, and always, like, I love them, young people, you know, when we do it by different cohorts, younger people, you know, would prefer savings and investments that are green. They're always much further on than older people in terms of supporting green initiatives, except for one thing, and that is, would the energy performance of your home, of a house, dictate whether you'd buy it or not? And of course the answer is no for younger people, because everybody's so desperate to buy a home, like, you don't look at the energy rating. And in the same way, you know, I think it's what you're saying about brownfield or derelict sites as well. Like, I think generally lenders are lending to people, they're not actually looking at the energy performance of their home. But you have to think about just transition there, because somebody will get a discount on a new house because they can afford to buy a beautiful new home. But somebody who can't afford to buy that doesn't get the same discount. So there is some innovation here, you know, where there is like a lender who will offer, you can get a green rate if you can prove you go even from, like, I don't know, a D to a C. So it isn't just for B2 or A rated. So I don't know if I'm answering you. There is definitely innovation there. And the risk appetite is for as green as possible and is verified as green as possible, which is why what the Irish Green Building Council is doing in terms of its looking at verification and different methods is really helpful as well. And it all comes back to collaboration. One really good example of innovation came from the European Investment Bank and our strategic banking corporation here, where there is a home energy loan scheme where they provide, the EIB provides a guarantee for lenders so they can offer more reduced rates to customers who are demonstrating that they are buying, that their property is going green. So that's an example of using some of the amazing funding that's out there. That's from member states, the EIB, right? And I don't think it's that replicated in Ireland yet. I heard it was, or in Europe, and that is very, very good. And the other thing, like my organisation, the BPFI, has called for, when it comes to smaller builders, smaller developers who have this kind of equity gap in their building. You're building one project, you want to go on to another one, but you've got the equity gap there. So we've been calling for a credit guarantee scheme there, where a lender might lend up to 65%, but the other 35% the developer has to get themselves. So that means smaller developers don't, they lose out because they don't have to finance themselves. They have to go to mezzanine finance, it's more expensive. So there's maybe innovation around how state and private get together.
Yeah, I think, to the point I think made earlier, there's nothing new in finance, and everything has been invented. It's just how it's put together now in terms of solving for the final solution. To your point, the SBCI loan is the first in Europe of its type for a consumer that has a risk-sharing element, both with European and state money. Long time to get to market, but I think I was still working there when they first thought about it, which is a long time ago. But maybe I'm going to put on my climate council hat here and think about finance in a broader sense for the built environment. And I'm going to think about or ask you about financing for adaptation, for resilience in buildings. So we talk about energy efficiency, we don't talk about water efficiency, we don't talk about risk and resilience to flood, to heat loss. When you look at what's happened in Spain in the last month, a place that we'd always thought about heat, certainly not about flooding and the damage that's done. It's, as financiers or as a Green Building Council, are we seeing that kind of look to, are we not just building and trying to reduce the whole life carbon in buildings as we go forward, but looking at the now, and are we actually fit for purpose for what might be happening? Because climate change is happening now, and we are seeing evidence of it. So is there finance going into that? Are we seeing any of that? Maybe Hans, you might have a view from a social perspective.
From a social perspective, I'm not seeing much in that area, to be honest. And which is a shame, because people that have a lower income are typically in places that are prone to these kind of risks. But in the social sector and the financial sector, I think the part of it that I work in, we're not there. We're not there, and we should be. I think and certainly when we go to retrofitting, this should also be an aspect that we should also always investigate and see, is this house, for instance, built in an environment that is prone to flooding? Are we going to retrofit it or not? Because if we do that, people are going to invest in this kind of homes, and maybe in 10 and 20 years from now it is worth it, or in between it is at risk. So we should really do more in that perspective.
Sorry, Louise or anyone else want to come in on that one?
Yeah, there is a really good paper from the European Union, European Commission, where they talk about their financing, like what European Commission are, what they are doing, our member states are doing to finance or to adapt, like from everything from like having enough firefighters to be deployed across Europe, all the help that was offered to Valencia there recently. Like, it was the most, and when we're all reading about climate, it's so depressing, but it was the most depressing document I've ever read. And I would just say, I think there's been such a focus on mitigation, demonstrating and reporting that you're reducing your emissions. We haven't been looking at adaptation, and that is going to cost a fortune. And we have to be really careful to get it right. Like in Valencia, in the city, like they diverted the river because it had flooded before. And they turned the old river into a beautiful park for tourism, but they didn't think, I don't understand enough about it, but we really have to get that right. It's probably more important, well, not more important, but it's as important.
Well, I suppose traditionally, from my perspective, what I understand is that most adaptation financing comes from the state.
Yeah.
Unfortunately, I think the volume that we're going to need of it, that the state won't be able to deliver all of its So I think it's about potentially looking at risk-sharing models that ultimately take in some private money, but they have to incentivize that private money to a long-term investment profile, which is much more difficult to sell.
Yeah, and also just to lower the barriers, because if you're talking about public finance, so if you want to invest in a public project with the counterparty, there's a tendering procedure. There's a lot of barriers. That's the Maastricht debt. Can they take more debt or can they not? They can't engage with any type of investor profile. So I think we're a little bit far away from that, to be honest. I think that more planning needs to be done. I think that we are doing quite well on some aspects, but the adaptation one is...
Sorry to add that
yeah.
negative tone.
Yeah.
But I think it's something we all need to bear in mind, anyone that's innovating as well, in terms of finding solutions. It's a mitigation has got all the attention and all the money, and I think it's something we need to really consider. Maybe just to wrap up this session, maybe just to ask each of you, if you had a wish for something that would be transformative, and I'm not something that can take 50 years to deliver, but something small, either in your own state or across Europe, you think would make all the difference to financing the level of innovation and change that needs to be delivered to make the built environment sustainable. Any one thing in finance? And Vera.
From my engineering perspective, I have a big wish. We should think about what we are financing. A very quick example. Vienna tries not to use gas anymore for heating, and they are taking huge effort. But we know that in 50 years, the climate in Vienna will be the same as it is now in Skopje. We will need cooling, no heating. And this is for me the biggest wish. We should not extend what we think, what we need today to the future. We really need to think about how should we prepare in terms of resilience for tomorrow.
Thank you.
So from my perspective, I think simplification, for me standardization, simplification is the wish from all points of view. From reporting to documentation, to steps that needs to be taken, to decision making, to approval process of a construction site, to an approval of a technology installation. I think that there's a lot of bureaucratic steps right now, and we are not as dynamic and as quick as we should be, and we can be. So yeah, for me, that's the.
Thank you, Alex.
Yeah, simplification is very important, but I think collaboration is also very imperative to make steps ahead. And let me perhaps give the example of cooperating within the financial sector. I mean, regular banks are really in a very regular environment. They are at the core risk adverse, and we can be happy about that because they manage our savings. So let's not change that. But maybe in innovative, collaborative ways, there are things to be done that we have, that we find ways to reach exactly those clients that we're working on, and get them on the housing ladder, and get them give them access to the financial market just by collaborating smartly and finding de-risking instruments and finding ways for hybrid financing, etc. So I wish that we're going that way, and we're taking up speed on that.
Thank you. Louise.
Yeah, I have two, I think. The first, yes, absolutely. Well, one is personal. So the first is, yes, a collaboration as well. And I'll give an example in Ireland where on so many issues over the last year, you know, we're the banking sector, we're not state, you know, and I'm always looking for access to data. So we don't have access to the energy performance certificate, yet the regulators require us to use energy performance certificates in demonstrating how we're managing climate risk. So there's a lot of energy going into that, excuse the terrible pun. And then also the Environmental Protection Agency and Met Éireann, as you probably know, are doing fantastic information. I've gone to their adaptation networks, which are so interesting, that the Environmental Protection Agency run. And there's all this brilliant data about flood risk and everything, which will really help in mitigating risk and adapting. Just really, really impressive. But the private sector doesn't have access, has some access to that data, but not everything. We're kind of not at the table. So it's in the same way that the building sector was talking about collaboration. There's so much stuff here that could be done. The planning regulations are going to change. That's probably a good thing. Banks often don't get to finance a project until all of that has been done. So how they influence it in terms of green is difficult. And the built environment, the regs are there. They're great. There's a lot being done. So more sort of public-private collaboration that will then facilitate the conversations that help with blended finance and risk-sharing instruments. I think that's really, really relevant. And I would note that the European Commission in its new mandate does have housing now, which would be very interesting. And the second, it's a personal one, is that Irish voters and customers and people would see the benefit of a 15-minute city and see the benefit of filling in, brownfield sites and derelictions, so that builders have demand from people who don't all want to live, in new sites. So there is demand there, there's government support, there's financing from the private sector to enable that to happen. I think that would be really, really helpful to allow us to prepare for the future that you mentioned.
Thank you very much. That's a large wish list, to be honest. I think what we've come back with is, yes, the scale of financing that's required, the transparency around reporting, the processing in terms of just making it all easier for everybody in terms of access, just transition, ensuring everybody's included, and recognising that finance isn't all about mitigation. It's also that the here and now needs to be actually improved, and maybe it's about encouraging financiers to consider that in their risk appetite. So just for today, I'd like to thank Vera Deinhammer and Alex Hedesiu, I can never pronounce your name, and Hans Vermeulen and Louise Mahoney for their input, and let you all off to your well-deserved lunch.
Thank you to all the panel there.